We know how to use technology.
I think we may be live now, but I don't know.
Actually, you can probably, if I just go on to YouTube here, I might be able to see if your stream is up. Oh yeah, it says we're live now.
All right.
Yeah, we're live.
All right. Well, let me bring up the chat then. That would be the other thing we need to do that I always forget to do. See, this is the problem. Like the chat comes up on Discord or on OBS, not on YouTube.
Oh, I see.
Hot mic moments here.
Are you guys able to see the chat?
Yeah, I can see the chat. I've got it open right now.
Oh, what in YouTube?
Just on YouTube.
Okay.
Yeah.
I'm not seeing it, but I can also pull it up on YouTube.
And then I guess the last thing I'll do is I'll post it. Yeah, see, this is the problem. Like, I can't even see that we're live.
Yeah.
Which is not what you want. Like, I just went on my own YouTube channel and it does not tell me that we're live, so. Like, I just went on my own YouTube channel and it does not tell me that we're live, so. Like, I just went on my
chat,
own YouTube
welcome.
channel.
We're just getting some technical things resolved. We'll
that we're live, so. Like, I just went on my
chat,
own YouTube
welcome.
channel.
We're just getting some technical things resolved. We'll
that we're live, so. Like, I just went on my
chat,
own YouTube.
welcome.
All right. This is quality content right here. This is what you came for. This is all right, cool. So I think we could get started now. Let me just bring up the chat again. All right. Well, to everyone, or I don't know how many people are here yet because I can't see anything. Welcome. Welcome back to Daily Crypto Analysis. Today we're going to be talking with the guys from Upside Down Data, and I'm sure you all know them at this point. This is Mark and Joe. So do you guys want to introduce yourselves again just quickly? I think, you know, I'm seeing new faces over here in chat, so I don't know if everyone will know who you guys are yet.
You want to start off, Joe?
Sure. I'm Joe. Hey. Thanks for having us, Jay. Always great to talk with you. I'm one half of Upside Down Data. What else should I tell folks? I'm a cognitive science PhD student. I like to think about that stuff and how it relates to markets, in addition to everything else that we talk about. What about you, Mark?
Yeah, so I'm Mark. I'm also a cognitive science PhD, although I am actually now a postdoc at a computer science department. And yeah, have a lot of fun taking a more data-driven approach to the market, creating data science-driven tools and models to try to understand the market a little bit better. So yeah, thanks for having us on, Jay.
Sure, certainly. Thanks for coming on, guys. So let's get started let's talk about the market right now and just kind of give your thoughts on where you think we're at. I know there's a lot of uncertainty right now, but what are your general thoughts about where we are and where we may be going here?
All right, you want to take that first, Joe?
You go. You got this one.
Okay. So I think I would echo the idea of uncertainty for sure. And I think really for me, it comes down to the macro picture for that. In a lot of ways, my thesis has been ever since November that really it's been the macro that's been dragging down crypto more so than anything inherent to crypto that necessarily necessitated us to fall this far, especially when you just look at the supply side. We never really got into those phases that you normally expect for a cycle top, at least coming out after, coming out of the summer. Like we never got long-term holders really selling off their coins and distributing off to short-term holders. Illiquid supply was rising throughout that whole point, not falling like we've seen in previous times. And so really where I see us right now is kind of in a holding pattern where, I think really the convicted participants in the market, ones with conviction who believe in the space, are here and they're not leaving. And they don't seem to want to sell their coins at these prices. It seems like they're willing to wait till we get higher prices before they start selling. But of course, with the macro environment being as bad as it is, with all these new entrants who probably care much more about the macro picture, who aren't just pure crypto people, they're not willing to take excessive risk right now. And if crypto is still seen as a risk on asset, that's probably why we're seeing that. So in terms of where I think we're going, I think really we could go multiple different ways. I think it's really going to, in my opinion, depend on the macro conditions. If we get really nasty things happening in the stock market, or certainly if there's recessions or things like that, that could certainly be things that could lead us to the downside. But if we get a release of some of that pressure, maybe that can let kind of this balloon that's been held underwater move back up potentially. But that's just my 2 cents. Joe, what are your thoughts on where we are?
Yeah, I like the analogy of a balloon held underwater, because throughout this uncertainty, there's still a lot of indicators that bullish is possible, at least if the macro were to cooperate, if there were to be an influx of supply from some catalyst. People talk about make the distinction between the supply and demand side from the on-chain sources of data. And, the demand side is still fairly bullish, but the supply side is really not there. There's not a lot of demand. I said that backwards. The supply is really bullish. There's not really that much available, but the demand is really not coming in right now. So in these conditions, I think it's really important to think in conditionals and to think in probabilities and to draw some lines on the chart that you'll keep an eye on and see how the price reacts to them. So one thing we've talked about is the TCI as an indicator, the trend confidence indicator, which maybe Mark, you want to say something about, and there are some other levels from market structure that I think are helpful just to identify as kind of conditional probabilities that trigger if we get closes above or below certain levels. So nobody really knows what's going to happen. So I like to try to coach myself to think about it that way in terms of if-thens. So right now we're at a pretty critical, in a pretty critical range that has a lot of confluence. And so, the way that we react here seems potentially diagnostic for, at least the short term. If we were to see a decisive break lower from here and a close on the daily chart or on the weekly chart, that would probably indicate that we have lower to go. But if we hold here, even if we don't see a bounce come in very quickly, then maybe all is not lost. Right now we're sitting in the upper 37s, just below 38K. So yeah, this is one of those if-then triggers. I think seeing how price behaves in relation to this particular level is especially important. That's what I would add.
Yeah, I think those are really good points. And I think, a couple things are worth pointing out specifically there. You talked about the fact that at the moment, the supply side is very favorable for Bitcoin. If we look at the supply held on exchanges, it's constantly dropping, and it's been doing so, ever since 2020. So we're in a situation where most of the supply has been pulled off of exchanges, and yet at the same time, because the retail market has sort of been scared out of the market at the moment, we just don't see that, wild, feverish demand that we saw at points in, 2021 and even later in 2020. So you sort of have a disequilibrium there, which is kind of causing the price just to be stagnant at the moment. But I do think once that, whenever that retail market does come back, you're going to see a position where, the market is ready to go because all of that supply has been pulled off. and something has to give at some point. So I kind of think that's a really good point. And you mentioned the TCI. For you guys who don't know, I don't know. I know a lot of people that follow my channel also watch theirs, so you guys may know. But they do a lot of data analysis like we do, and they have a particular model called the
Trend
TCI.
confidence.
Yeah,
Trend confidence.
yeah. I always want to call it the trend confidence interval. So.
Same. Yeah.
But I'll let Mark talk about it here, and I think it's really interesting if you guys take a look at it, because it shows some interesting things, and it's in the past it's kind of front run the market by a bit. So I think this is one worth checking out.
Yeah. So here I can share my screen real quick just to show what the TCI looks like. So for those who aren't familiar, this is a machine learning based algorithmic model that we have at our channel. And really what it's trying to do is look at the current trend the market's in. So are we in an uptrend or are we in a downtrend? And then give us some idea about how confident we can be about the continuation of that current trend. So 0 is kind of the critical level for this model. It's kind of what divides bearishness from bullishness. So above 0 is a good thing, that's bullish. And so that's why I've coded it here green, and then below red being bad. And the way you can read it is that if you're currently in an uptrend, let's say, what you want to see is if you're in an uptrend, the TCI is staying green. If you're in an uptrend and the TCI is spending a lot of time in the red, like what happened back in the spring of 21, that's a pretty bad sign. And in fact, this kind of, as Jay was mentioning, really front ran or was a leading indicator of the collapse that we saw throughout this whole kind of big distribution pattern we saw. But then on the other side, if you're in a downtrend, but then the TCI springs above 0 and is hanging out here for a while, that's a really good sign. And this acted as a leading indicator in the summer before we then popped off, back up to put in a new all-time high. And so more recently where we've been hanging out is actually in the green zone. Ever since early February, actually, we haven't had a close below 0, which is generally a good thing, because at least in recent history, every time we've closed below 0, there's been some more downside that has followed. So it's a good thing that we haven't been there yet. But one of the things that you can do with this model, which is helpful, is you can probe it to ask what price level is it watching as being kind of a critical test of bullishness versus bearishness. And we're basically testing that level now, as Joe, I think maybe had mentioned. The critical level, kind of last I just checked before we went live, was around 37.6K. Now, that exact level, you take it with a bit of a grain of salt. And again, you'd really see if you saw a convincing close below it, that's when you want to be concerned. But the fact that we're at that level does just suggest that we are kind of this undecided territory, that if we stay above that level, then this model thinks that we have good reason to remain bullish. But if we close well below that level, that could be potentially concerning.
Yeah, I mean, could you bring that back up for a second, Mark? I just wanted to,
oh yeah,
sure. Because I think it's actually pretty incredible. I think you guys can see my mouse. If we look, so the green and red is the TCI and the yellow is the price, just, to make that clear for everyone. And you can see how on the TCI, look at it was showing, lower highs, and starting to make lower lows, while the market was still up in the 50 and 60K range. And, once it crashed down in May, the TCI started saying, hey, this is probably a good time to be acquiring the asset right now. So I kind of, if you look at this, it was telling you to start acquiring what we were at, I think 40K right here, maybe, and then maybe some at 35 all the way down to 28. And the TCI was suggesting, while the price was moving down still, you should be acquiring right now, because we are moving, we started making higher highs, higher lows, and then into the, so you could have been acquiring based on this, into this massive uptrend. And then, once we got up here, once it started to really slow down, the TCI was telling you that, things are slowing down. So I think this is a great indicator to watch. And it's funny to me that right now the TCI kind of doesn't know either, because it's sort of, it's sort of trending sideways right now, which is interesting, because I think it's sort of in agreement with everyone that, who the hell knows what's going to happen in the very short term right now, because of
exactly
all of the volatility. So
yeah, like we've been in a very slight, I mean, if you kind of, sort of been in an uptrend recently, although who knows if that's if it's actually, I mean, it's not really an uptrend because we're not putting in higher highs, but we have it in putting in higher lows at the very least. And so it is still leaning bullish, where it thinks that this looks more like an uptrend than a downtrend from its perspective. But exactly as you were saying, Jay, since we're right at zero, it really doesn't know right now.
Right.
So if we do have a convincing close below this, then it would flip back to being more concerned, most likely.
Yeah.
Yeah.
This is an indicator that I think is, definitely worth continuing to watch, because, I think the results have been very impressive so far. I think it's going to be important to continue to watch this thing.
Yeah, definitely. And we'll continually be updating on our channel as it puts in new interesting things. Certainly if it puts in a convincing close to the downside, I'd put out a video talking about that, because that could mean there might be more downside coming.
Right. All right. Well, let's move on then, to the more political side, let's say, the presidential executive order. I know, there's been a lot of talk about that really recently. Did you have any opinions on that, Mark?
Yeah, so I had a chance to read through that recently, and I thought it was an interesting executive order, although obviously a little bit vague, probably on purpose, exactly what they're trying to do or what their exact opinions are. But in that document, they laid out kind of 6 main goals. I won't go into any detail, I'll just give kind of the headline of each one so people know what was in it. The first section was about consumer protection, just making sure that people aren't getting scammed, that kind of thing. Financial stability was one thing that they mentioned, so making sure that volatility in crypto can't lead to instability in broader markets. Illicit finance, so just making sure that people can't be using crypto to do illegal activities like ransomware attacks, or they didn't mention evading sanctions, but that's something that's come up more recently. They also want to maintain U.S. leadership in finance, and so they want to see how they could maybe facilitate that goal through digital assets. Talked about financial inclusion as well. Digital assets providing a great opportunity for underbanked and unbanked individuals to get exposure to financial markets. And then they also talked about responsible development and use of digital assets, which really kind of was the section that felt like it was setting the tone for the executive order in my reading the most, where it seems like the government wants to research, and that's really what this executive order was all about, is getting different government agencies to do more research on digital assets, then also a central bank digital currency as well. But it seems like they are not dismissing it or saying it's necessarily a bad thing. They just want to understand it more and see how we can foster innovation and adoption potentially in a way that is responsible, in their words. So I thought that was really interesting. So I don't know if it might make sense for me to bring up some of the more specific things I picked up on in that document, or if you all wanted to respond to some of the more general things about the executive order.
Yeah, I mean, just in general, I think the fact, to me, it's a positive sign. At the end of the day, regulation was going to come. I know a lot of people, it's sort of antithetical to crypto to have government intervention. But if you're going to have it, a part of people's daily lives, especially if it's a part of their financial life, the government is going to get involved. So to think that they weren't is, and to sit there and say that, oh, this is a terrible thing, potentially, but at the end of the day, I think this is something that's unavoidable, especially as large as it's gotten. And, we've seen people get scammed left and right in crypto. And I think that will continue to happen. And because of that fact, the government's going to get involved. So that's just sort of the baseline. So what I'm saying is, when I say I think it's a good thing that regulators are getting involved, it's from the investment side of the coin, because I think once you have more clarity as to the regulatory scene, then your institutional type investors are going to feel more comfortable, investing in crypto. But when they don't know what the political climate or the regulatory climate is going to be in 6 months or a year from now, they're going to be hesitant to get involved, because they're in general much more risk off than your typical retail investor involved in crypto is. So if they don't know how that's going to affect them, they're not going to be a part of it, because that's kind of what they do. They try and make sure thing bets. And if they don't know if they'll even be allowed to hold the asset 6 months from now, they're simply not going to touch it. So I think from that perspective, it's a positive thing, because it will get some of the more big time players in the game.
Yeah, another thing that I thought was striking about, your summary of it, Mark, is that, it kind of reflects the fact that crypto is still finding its use cases, right? I mean, we know that some of them are, but probably a lot of the ones that are going to become important over time haven't really been built out yet, or maybe even haven't been thought of yet. And so that seemed to be kind of implied also. It's like, we got to actually think about what this technology is capable of and all the different potential applications of it. Money is one of them, or store of value. We have smart contract platforms is probably the most widely used use case outside of Bitcoin. But thinking concretely about what the potential is probably a good thing. And it's not necessarily a good thing in every instance. But like you said, Jay, it's inevitable that the government is going to play a role in that process, and could be beneficial in that the private and the public sector have different interests, and they're going to think about different problems that need to be solved.
Right.
The technology is capable of contributing to. So I think it'll be interesting to watch that development as well. What's the technology actually going to be used for over time? Which has investment implications, and obviously also has implications beyond that. So that seemed to be, part of the message that's being sent also, I thought.
Yeah, I agree.
Yeah, and one thing that's actually interesting to pick off of what you were just mentioning, though, Joe, is this is something that was specific I noticed within the executive order, but I thought it was really interesting because it kind of touched on some big debates around crypto that has to do with this idea of use case. So one of the things that they brought up later on in the executive order was wanting to research the possible use of blockchains for things like monitoring climate impacts. And more specifically, what they were talking about is using blockchains to exchange things like carbon credits or other environmentally related kind of products, derivatives, whatever we want to call those things. And I thought that was just really fascinating, because it kind of suggested two things to me. The one thing was this idea of use case, like you were mentioning, Joe, this idea that they want to understand if blockchain is something that could be used for these kind of international markets like that. And obviously blockchains have a lot of advantages in that sense, that they're immutable. They're not dictated by one government that's not controlling the whole thing, or one centralized organization that's beholden to one government's regulations, but it really would be this immutable exchange domain for those kind of things. But the second point that I thought was really interesting is that with the climate issue of crypto, oftentimes it's very much spoken about negatively by a lot of politicians. The usual talking point, just, oh, crypto is all bad for the environment, we need to ban it for that reason. I think, for example, in Norway, there's been some pushes in their government to ban crypto mining for the environmental aspects. But this kind of suggested a more nuanced understanding, potentially, by at least some people in the administration, that there's use cases for crypto that could be positive on that front, and not just kind of the normal negative thing that we hear. So that was one thing that was a kind of a small thing, just kind of a note in there, but I thought it actually maybe gave some insight into what I think is a kind of an important element, just because that's often used as a cudgel against crypto.
Right.
And that, I think one thing that's interesting about that is that obviously that'll be more compelling to some people than others, but I think it's a sign of the maturity of the technology and the degree of adoption, that everyone is going to try to figure out how to use it for their, to advance their own priorities. So whether it's Democrats or Republicans, the public sector, the private sector, the technology has kind of arrived to some extent when everyone's like, okay, this is legit. How can I use this to advance my goals? So to me, the point isn't, whether this particular executive order aligns with my or your priorities, but more that everyone is going to be trying to figure out how to use it to advance their priorities, whatever they are.
Cool. Well, let's you guys want to take a few questions from people? I think there's some good ones here. So Scott says, it seems like sentiment for crypto, and this, this is right up these guys' alley here. So it says sentiment for crypto is falling, even though the Fed is seemingly a little more dovish, and Powell has literally told us to expect 25 BPS. So what do you guys think? Why is sentiment falling in spite of these, potentially, even though I would question whether the, raising the interest rates just in and of itself is more bearish because of the fact that they have to, because of, the inflationary issue. But what do you guys think about sentiment right now? Why are we seeing it at such low levels? I mean, if you look at, Google Trends, if you look at number of active users, if you look at number of transactions, everything's down right now. Why do you think that continues to be so?
So, so if I were to take a punt at it, or to take a guess, I mean, one thing that's possible is, we have been, see, how many months now is it? Like 3 months plus in a downtrend,
Right.
that pretty much any kind of move to the upside has immediately been just punched back down. So to some degree, there could be some amount of recency bias in the negative direction, where people just, it's hard to feel positive sentiment right now because every single time we go up, we just immediately come back down. So even with these potentially bullish things on the horizon that we can see, it's a little bit hard to just believe it from that perspective, because we're just so used to the negative kind of prevailing momentum that it's hard to see it any other way. I mean, I do think it'll be really interesting to see how the market reacts to the FOMC meeting, which I think is Tuesday and Wednesday of this coming week, where we'll hopefully get at least some certainty about what the Fed's going to do with interest rates. And I think even if they do raise it, like 25 basis points, or however, whatever they end up doing, it's possible that the market could actually pump out of that, even though that might seem ironic to some degree, that it's a kind of objectively a negative thing for the markets for interest rates to be going up, but the certainty it provides might be enough that some of this money on the sideline might feel better about coming back in. And especially if sentiment's been so poor and the only people who are in the market are people, or not the short-term holders who aren't just going to immediately sell, then who knows, maybe there could be some kind of a rally out of there. Now, I'm not going to go out and predict that that's going to happen, who knows, but it wouldn't shock me if this ends up being a buy the news type of event rather than a sell the news type thing. But that's just my 2 cents. Joe, do you have a different take?
If the price action has just been so brutal recently, like you said, Mark, I mean, it's been Bart land. If you look at the chart over the past few weeks, it's not just that it's been choppy. Like, choppiness happens all the time in crypto. It's that we've had really massive pumps that a lot of people found convincing, that were rejected like right away in the most painful manner. So I think it's just like a lot of people have just gotten wrecked, and people are second guessing themselves. I have a question, I guess, that kind of riffs off of this one, which is, is it possible that even the high conviction people are experiencing more doubt than maybe ever before? The world has just been like a series of like bad news for a while now. At some point, you might start to wonder like whether your model of what's supposed to happen here in the macro is like, getting off course. So yeah, I mean, the price action and the world in general just don't inspire a lot of confidence.
Yeah.
Yeah, that's what it seems to me.
Yeah, I think, you basically, I mean, let's just be frank. You had a pile of shit, and then on top of it, Russia invaded Ukraine. And that sort of, to me, was, just look at the stock market. If the stock market continues to show the action that it is, first of all, we already had a bad sentiment prior to that event. All of these trends were already in place. And then you have that occur as well, which, at the end of the day, I think what you're seeing is sort of cryptocurrency being, field tested, so to speak, because Ukraine, for instance, is utilizing it in an intended, in an intended manner. It's being used to sort of circumvent the, the traditional finance system. people are donating to Ukraine in that manner, and they're using it to to help themselves. So we're seeing it being used in a real world use case right now, and I think in the long term that will be something that will be talked about in a positive light. Unfortunately, with inflation, with like you said, the price action has been terrible. With the stock market as a whole itself is performing poorly right now. It's below some of its key levels that you historically, when it goes below those levels, at minimum, you're looking at a significant amount of time of sideways movement, if not downward movement. So I think there's just so much working against the asset class at the moment that it, quite frankly, like they said, it's very difficult to be, it's very difficult to be short-term bullish right now. But, and this is what I always talk about on the channel, keep it in perspective that it is these moments in time, every single market cycle, where people obtain life-changing wealth. It's not, no one becomes rich. Very few people become rich during the bull market. People become rich during the bear market when everyone else is out doing something else right now, not investing in crypto. The people that are in the markets right now and that will stay in the markets, if we did go into more bearish segments of the market, they are the ones who are going to, be profitable in the end. It's not going to be the people that come in, January through April. I mean, look at the returns from that time. You could have had nice returns, but you would have had extraordinary returns if you were there in 2019, 2018, etc. So that's kind of my look. So even if you think it's bad right now, you need to be long-term focused, not someone thinking about, June of this year, because June of this year doesn't matter, quite frankly. It's June of 2025 that I think you should be looking at, and looking to dollar cost average throughout the bear market, or at least the more bearish segments of the market. So go to the next question.
Yeah, let's do it.
I think this is a good one. And we could each just give an answer in maybe 30 seconds or something. How low can, and the question is specifically, how low can we go? But let's just specify Bitcoin. And Ethereum, how low do you think we could potentially go? And you can give, realistic worst case scenarios, let's say.
I mean, we've never retested the prior all-time high in a subsequent cycle.
Right.
That seems like a logical floor. If the price were to get down there, that's 20K for Bitcoin, 1,400 for Ethereum. Bitcoin obviously leading the market, so that's probably the one to focus on. I think a lot of people would think that was a huge anomaly, that was really unlikely, and that only happened because of some black swan or from extreme fear coming into the market, and would step in and buy. So I think that if we were to get back down to the lower 20s, you should probably consider going in pretty hard. That would be my thought.
Not financial advice. Not
financial advice. But be real, right? We're probably not going to see that, I don't think. But if we did, all the historical data would suggest buy.
Right.
Yeah, I think that would probably be my base. I was actually thinking the exact same. And also the 200-week moving average, which is so far for Bitcoin often provided kind of a floor price, is basically at 20K right now. So there's a lot of confluence from that perspective at that level. And I can't remember what the long-term holder cost basis is, but I think it's actually somewhere around there also, or it's in that general kind of ballpark. So there's a ton of kind of possible support that would exist at that level. Now, the one thing in terms of how low could it go, I mean, the question is, I think in normal times, that's what I would see as being the floor. I think, though, if we got a complete meltdown in the macro picture, let's say there's worldwide famine because we're not able to get exports out of Ukraine and Russia, there's massive commodity shortages because we've lost all that supply that they, between the two countries, produce of many different things. And then that is handled terribly by the rest of the world, and we end up going into some inflationary stagflation environment that just ruins markets. then I don't think any of those normal floors are going to apply anymore. And then we also know that in terms of just kind of like a market structure kind of perspective, there's not a whole lot of support. Oh, there's certainly not a lot of support above 20K, but even from 20K below, in that run up that we had in the bull market, there wasn't a lot of time spent there to really build up any more recent kind of support. So things could fall off further than in that kind of scenario. Now, do I think that's likely? Not especially. I'm not going to bet that the worst case scenario is going to happen. But if the question is how low can it go, I think that is one scenario that I think it could go lower in those kind of environments. But that's not to be a doomsayer. It's just to throw it out there.
What do you think, Jay?
Yeah, I mean, I think right now, based on everything going on, you have to look at two scenarios. Scenario one, like like Mark laid out, doomsday scenario. Well, first of all, let's put it this way. Just look to the stock market. If you have a 2000 or even a 2008 type scenario, I think I've mentioned this many times. No, you never see anyone talking about this, and I can't fathom why this is. I think it's because, quite frankly, people don't want to hear bad things. Since Bitcoin has come out in 2010, on exchanges, the stock market has been in nothing but upward movement with, relatively tiny corrections in between. The COVID capitulation, was the biggest sort of correction we've had. So we've been in a relatively, I don't want to say golden age necessarily, but, this has been a time in the general market that has been prosperous. If you have something like a major, massive level correction, like you saw in 2000, where we went down, the NASDAQ went down, I think 75% in a 2-year period. If you have something like that, and you think Bitcoin's holding up at the 20-week or the 200-week moving average, I think I could be wildly wrong about this, but I suspect that that would be, quite frankly, the least of our concerns. But let's say that doesn't happen and we have a more normal correction. I mean, events like that don't come, they come along every, I was going to say every, 20 to 30 years, which actually puts us right in the sweet spot for something like that to happen. So, but let's say that doesn't happen and we just have a normal type correction here. Then I think, you are looking at worst case scenarios of, around 20K level. Realized price of Bitcoin, which is the average price at which all individuals hold Bitcoin, is 24K. Historically, right when it's got down to that realized price, has been a turnaround point. But you also have now people like Saylor in the game, Michael Saylor, and MicroStrategy, and people like I forget his name, the guy at who left Twitter to start Square, which became whatever it's called now.
Jack Dorsey.
Yeah, Dorsey. You have guys like that now in the game, and they, I think, aren't going to be sitting idly as the price drops below their cost basis. I think that they they have a long-term vision. They have an investment thesis that involves Bitcoin, obviously heavily involves Bitcoin. In fact, primarily involves it. And I think things like that matter. So those guys will likely have stepped in by the point that it's getting down to these lower levels. And, now, like I said, if we're in the doomsday scenario, then who knows? But as it stands, I don't think that the price could potentially go much lower than that without some sort of doomsday scenario. So there was another sort of related question here, which they ask why, when whales buy a large quantity, so when they go out and buy a large quantity, why don't we see a price turnaround right away? And, I guess I could just kind of answer that, because it quite frankly, it just deals with the fact that they're buying over the counter. So they're not buying on exchanges, and that's so they buy from some other seller at an agreed price, oftentimes an exchange, and that sort of happens on the, you'll see it on the network. And that's why I think on-chain data is so important. because you can see things like that when they take custody of it and that coin moves at like whatever certain price, you see that that event occurred, but that won't necessarily have anything to do with the price itself. That will sort of that becomes the issue of supply and demand. So as you know, Joe was alluding to before, supply side can look great, but if you don't have the demand, you need that bid and ask to constantly be shifting on the exchanges to sort of drive the price. And when you don't have, you know, exuberant retail market, in this case, in crypto's case, it's simply not going to move the price right away. But eventually it will have an impact on the price. I don't know if you guys have anything to add to that, but I just thought it was related, that question, worth answering.
Yeah.
All right, let's see what else we have. Maybe take one or two more.
Yeah, sounds good.
All right. Do you want to say something, Mark? If you have something to add, go for it.
I mean, the only thing I didn't have anything important really to say, so I wasn't. But one thing I will say is that you can see some instances like why whales don't go on exchanges, just because the slippage of them trying to move that much capital in any short amount of time is so extreme. I think the biggest example of that recently was if you looked at Binance US, the Bitcoin chart back, I think it was like in November or something. There was one day where it dropped down to like 8K when Bitcoin was trading at 60K, because presumably someone dumped, probably on accident, dumped a ton of Bitcoin on that exchange and just cleared out the order book. So some very lucky people got bids filled at around 8K and made an instant like 6x plus on that investment. So yeah, the whales, they really, if they're trying to move big amounts of capital in a short amount of time, they can't use exchanges. There's just not enough liquidity available. They would massively undermine their own self-interest because the price would move so heavily in response to what they're doing.
That also suggests that if you're holding some stable coins for any kind of extended period of time, it might not be a bad idea to put in some kind of wishful thinking types of orders, because you never know.
And especially in the low liquidity exchanges like Kraken, I think is pretty notorious for this, where you'll just get these random days where the price dips down like 50% for no reason and then just bounces back up. Just an interesting thing that can happen on those low liquidity markets.
Yeah, so there's a lot of just sort of comments, and you know, a lot of them echo a lot of the things that we've been saying here. I guess the last thing we could talk about then is just well, maybe we'll take this one other question, but I need to finish reading it while one of you talks.
Dogecoin to $1.
Yeah, well, which altcoin would you say would be worth looking at now if we were to say head into a more bearish segment of the market? Which do you think might be worth holding now, say 4 years from now, at the next bull run, whenever that occurs?
Do you want to take that one first, Joe?
Sure. Well, I mean, the key question there is what's going to survive, right? Because we know from previous cycles that even a lot of the ones that seem reputable and seem to have some kind of utility are probably not going to survive in the end. And it's going to be hard to pick the ones that will, unless you really focus on the cream of the crop. So that includes, for me, something like Chainlink, which is kind of the plumbing of the crypto space. It makes a lot of other things run, has partnerships with all kinds of companies inside crypto and some major corporations outside of the crypto space. A lot of money is relying on Chainlink to stay operational. So Chainlink is here to stay, probably. If you look at the price chart, also, you know, it's performed well at times when a lot of the market has not performed well. It's a relatively young asset, so it's not a ton of data. So it's hard to know like what explains its low correlation with Bitcoin and the rest of the market, but it is there. And so that also kind of reinforces the idea that in bearish market conditions, Chainlink is one to focus on. It's got the fundamental utility, and as something that we've both talked about on our channels previously. During bearish times, fundamentals are especially important. And you know, the historical price action is also favorable when the broader market conditions are bearish. So that would definitely be one to consider, you know, for someone who had a dollar cost average approach through the bear market, for example. So that would be, that's one to nominate.
Yeah, Link has an absolute stranglehold on its sort of niche in the market, probably more than any other asset, I would say. So I think that's a good one. What about you,
Yeah.
Mark?
Yeah, I'd agree that Link is a strong contender for sure. So one of the ones that came to my mind was Atom Cosmos, and really the thought behind that is if interoperability becomes a much more important element of crypto, which all indications seem like that's the case. Certainly, there are a lot of bridges that keep getting built between distinct blockchains, but one of the risks of those bridges is that they could get hacked, things can happen that go wrong. It's not a very elegant solution. Whereas Cosmos, really the organizing principle behind Cosmos, what it was designed to do is be the internet of blockchains. This idea that you have many distinct blockchains running, but they can seamlessly operate with each other, where you can move assets from one to the other seamlessly by design. You don't have to worry about these bridges that have faults. And Atom's been holding up, in the short. Atom's also a younger asset, so time will tell sadly how well it's able to perform in some of these situations. But currently, it's been one of the ones that's been doing better in this more bearish condition. And then chains that are a part of its ecosystem or use the Cosmos SDK, like Terra Luna, for example, have been doing quite well. And now, of course, Luna has its own things going on for why it's been doing well. But certainly, it probably doesn't hurt that it also has this interoperability piece going on that just makes it easier to deal with those blockchains and move things around versus some of these other layer one chains that we've seen, like, say, Solana, which have bridges elsewhere, but they're not designed to be interoperable with other ones. And so if crypto and blockchain goes to more of an interconnected space, something like Cosmos seems like it has a head start in that kind of thing, whereas some of these other ones would have to play a lot of catch up if they wanted to get to the same position. So what about you, Jay? What would you nominate as being?
Yeah, I mean, I think that there's kind of two that I would have, and for different reasons, maybe. So I think, like you mentioned, Luna. If we look at the total value locked on Luna, it's just blowing away pretty much everything else right now, other than Ethereum, obviously. And that's for the fact that I put a video out the other day talking about this, but the whole UST dynamic where you buy Luna, you burn it, so you're actually decreasing the overall supply. So it sort of has a, in the appropriate conditions, a deflationary aspect to the coin. And you get 20% reward, or you earn 20% if utilizing the Anchor protocol on that UST that you mint. So I think Luna right now is buying Luna and burning it is a hedge against the uncertainty of the markets. I mean, no one's ever, you could go do the math, but if you make 20% on your money and you're consistently contributing that for about 10 years, you'll be a happy camper by the end of those 10 years, let's put it that way. So to earn 20% in a bear market, or have the potential to do that, I think is going to continue to drive demand for Luna as long as the markets stay sort of depressed, and probably even further than that. So Luna would be certainly one, but it's sort of opposite of the question we're asking, because you wouldn't be buying Luna with the intent of holding it. You would actually be, in that case, buying it with the intent of burning it and minting UST. So the other one that I would consider is DOT, and I think like Mark was sort of mentioning there, the future of blockchain, it's going to have to be interoperable. 10 years from now, if you want this to be a burgeoning, or continue to be a flourishing industry, it simply can't be this thing where nothing communicates with nothing else, and everything is sort of its standalone layer one. You're going to need a system where that layer one can sort of communicate with other layer ones, can communicate with layer twos, and it has to be able to communicate with other networks. And I think Polkadot has positioned itself well, both in the Polkadot ecosystem itself because of its parachain, parathread type network, but also I think it's positioned well to be able to communicate with other outside networks. So Polkadot, we haven't even seen the price do very well yet. And so I think from an upside potential, I think Polkadot's sort of positioned well in that sense. So those are the kind of two that and Link, I put a video out, a month ago talking about Link, saying that I think it's probably, in terms of fundamentals, the strongest currency. we were talking before we went live, and we were all kind of lauding Link here, and the fact that I think we all kind of agree Link is probably going to be around 10 years from now, as long as cryptocurrency is still around, which we all think it will. And so Link to me has the best fundamentals out of any asset. So those are the three or four that I think are definitely worth taking a look at.
Someone also asked whether this is the cycle that ADA finally dies.
Yeah. Do you guys have any thoughts on that?
I'm not sure it's meant as a 100% serious question.
Well, I mean, I think it's on a lot of people's minds, certainly.
Because of the price action?
Well, I think it has a huge investor base. And I think there have been high expectations upon it. Just simply, Charles Hoskinson, a lot of people put a lot of faith in him. And, quite frankly, they've come under a lot of scrutiny for their more academic approach to building the ADA network. Just because it's a slower, more meticulous, but perhaps more secure process. And I've kind of discussed before, I think that in the shorter term may not, be appealing, but we don't know what form cryptocurrency is inevitably going to take in the future. And as you have more governmental agencies coming in, there's going to be a demand for extraordinarily high level security blockchains and things like that. So perhaps ADA is utilized in a way that you're not even considering right now. Now, what that means for its price as an investor, though, could be a completely different story.
Yeah, I think your point about the security is potentially really important, because if you're going to get bigger players starting to utilize things like DeFi or things like that, the fact that you'll see these massive DeFi hacks happening not terribly infrequently on some of these other chains, if you're a big player, you're probably, if you are going to expose yourself to that, it's going to have to be very minimal, because you don't want to be putting yourself at crypto's already risky enough. You don't want to be layering on these smart contract risks or hacking risks on these other chains you can't necessarily trust it as much. So I think that would be the more bullish kind of argument for ADA, is that whatever happens in the short term, if it can stake its, put its stake into that sector. And this is something that I've been kind of thinking about a lot with layer ones, is that it feels like the space is getting so cluttered right now that it almost feels like the ones that are going to be successful are the ones that are able to really differentiate themselves on some dimension.
Right.
Because I think the idea of just having layer ones that are doing everything like Ethereum is just not going to be viable for these competitors, because there's so many doing it. There's Avalanche, there's Phantom, there's any number of ones that are trying to build their ecosystem, Binance Smart Chain. And so it almost seems like for ones that maybe are slower to build up their ecosystem, they might have to take a different niche and then maybe find success that way. And I almost feel like some chains are already pivoting in that way, potentially realizing that that's coming up. That's just another thing I've been thinking about related to that.
Yeah.
I don't know if you guys have ever done fantasy sports at all, but there's this idea of post-hype sleepers, where you can get potentially, a top draft pick from a couple of years ago who was kind of a bust. You can get them cheap on the idea that they still have the potential that they had then when people were willing to pay a premium price for them, but they haven't realized it. And now people are kind of over it. So you're kind of banking on them rediscovering that ability. So I feel like ADA is kind of a post-hype sleeper. Like, it was a big thing for a while. People made a lot of money, and then people lost a lot of money. But it still is what it's always been. So if you believed in it then, or if you believe in the story that, that catalyzed it initially, then, maybe it's got a bright future ahead.
Yeah, I think it's, my only concern with ADA is the fact that at some point, you're working with 2017 or whatever it is, 2018 patchwork, 2018, 2019 technology, and you're going to be going against, future blockchains coming out with 2022 technology, 2023 technology. And so, or, advancements or insights into the market. And once you have that base layer down, it can be very difficult to sort of go, oh, well, it'd be great if we could have this feature, but it's almost impossible now because we've been building around a completely different direction for the last whatever 4 years. So that's my concern with Ada. But I,
Yeah.
yeah, it is what it is.
Yeah, I think that's a great point. And the one final thing I'll say, and this isn't necessarily specific to Ada, is just kind of maybe more general, that as long as the trilemma persists, the idea it's a trade-off between decentralization, scalability, and oh shit, I'm forgetting what the third one.
Security.
Oh yeah, security, right? Yeah. But so if Ada, I mean, my understanding is that Ada is doing pretty well on the decentralization angle. Like it's a lot easier to put up your own node on Ada than it is a lot of other chains. Like the requirements are, I mean, you still have to own a lot of Ada to be able to run a node, but it's a lot easier on the hardware side and things like that than some of the other, like Solana, for example, requires crazy hardware just to run a node, and then also a bunch of Solana to do it. And so I think part of it's going to depend on what do different parts of the market value, and does one win out, or is there always going to be demand for all three in different contexts? And also, like we were mentioning with security, that maybe if Ada is stronger on security and on decentralization, but not really quite as good on scalability, it's not as fast or as cheap as some of the other blockchains that are out there. Maybe that's okay, depending on what the market values. And I think, but then of course, if we are in a situation like you're talking about, Jay, where we actually end up being able to solve that trilemma and have chains that are doing all of them all at once, then any chain that's not doing them all at once are going to have problems. And frankly, that would spell problems for every layer one that currently exists. So it's kind of a tail risk to all of these, I feel like, at this point.
Yeah. I think Samuel says on the other side, it's the same for Ethereum and Bitcoin. But I feel like the key distinction is Ethereum has a massive network of individuals using it. Cardano has no one using it. You have investors, you have people, earning, staking rewards. You have people earning validator rewards. But you have people using Ethereum, and there's a reason the gas fees are so high. It's because people are demanding that asset for that purpose. On Cardano, you have Sunday Swap, an essentially failed, at least ostensibly failed decentralized exchange. And for Bitcoin, you have the store of value. It's not competing against anyone. Any of its competitors that are competing in the store of value space are so far below Bitcoin that they're not even, I can't even tell you who second place is, because I don't think there is a second place.
Doge.
I think that, Doge, exactly. Doge, exactly. It's literally Doge is the second place. So, I think that's the key fundamental difference here. So I don't know if you guys have a thought on if Bitcoin and Ethereum, what the differences are, but that's kind of my perspective on it.
Yeah, I mean, I would agree. I think that they're kind of, and just looking at market cap, they're in kind of a league of their own right now. It's hard to really compare anything to them.
I guess he's referring specifically to the dated technology aspect of it.
Oh, right, yeah. But I'd agree with you that they're not. I mean, I guess Ethereum kind of is trying to compete in that area in ETH 2.0. Like they are trying to bring about a bunch of upgrades that ostensibly will allow it to actually compete more directly, like sharding, for example, on ETH 2.0, moving it to a proof of stake blockchain, all that kind of stuff. Although people still speculate that even with all that, it's still going to need layer twos, and gas fees are still going to be expensive, because likely any scalability would just get eaten up by more demand if it became really cheap all of a sudden. But I agree with you with Bitcoin that, in a way, like the Bitcoin maximalists, they don't want to change the technology. Like that's what keeps it kind of pure, in a sense, that there's not really anything funny going on under the surface. It's very transparent. It is what it is. It does what it does, and that's all that's really meant to be.
Right. Yeah. All right. Well, I think that seems to be most of the questions. I may have missed one or two. I'm sorry if I did, guys. I guess the last thing, do you guys have any opinions on fractals? Do you believe in them? Do you think they have any utility? I think you can look at, I guess it depends on your precise definition of what a fractal is. I take them to be, I take them more broadly, something like, oh, we're seeing the 2018 pattern kind of play out again. But I know other people think of them as something like, oh, look at this 6-minute time frame or this 6-second time frame. We're seeing it play out on, on the 6-month time frame, in which I think that's crazy. But I don't know that you have like the Elliott wave people, that kind of stuff. I don't know. I don't get into that too much, so I don't have a strong opinion.
It seems a little bit, I mean, it's has the potential to be kind of astrological, right? And just like you can find anything that you want to on any chart.
Let me just say, on Twitter yesterday, I said, I was asking about TA, what, people that are into TA, and someone said that TA is astrology for men.
Basically.
So, yeah. So I don't know.
I think like if you can map it to real things, then it can make sense. Like if it's tied to like a duration of time, to price levels where there are orders waiting for the price to revisit it, then it can make some sense. But I feel like it's really hard to know if you're evaluating it like if you're just seeing what you want to see or not.
Yeah, that's kind of where I'm at on it. What about you, Mark?
Yeah, I mean, for me, like I don't really use them often. The only times I use them is when I just want to get some kind of an idea of like, if this were to happen again, where would that take us, or what would that actually look like in the current time? So kind of like test different hypotheses. Just like if there was a bearish scenario similar to, like, let's say for example, we see some behavior on like the RSI or on like a risk indicator that looks similar to something we've seen in the past. It's like, okay, if we're going to see the bearish version of that, what might that look like if we did the exact same thing as then? If we got the bullish side, what would that look like if we did the exact same thing? And not to read it as in like this is exactly what would happen, but just kind of to get some idea of like maybe different possibilities that would exist. But I would personally never use a fractal as like guiding where I think price is going to go, because I just think that to expect a move to play out exactly the same as it did in the past, I think is quite questionable.
Yeah, I mean, I think you're coming on, you asked 3 data guys what they think about, fractals and Elliott waves and that kind of stuff. You're probably not going to get very positive answers typically, but I don't know. It just, if there was evidence that it, some sort of concrete evidence and there were rules in place, that's just kind of, I think it all comes down to what the way your brain works. If you're someone who thinks about things in terms of concrete terms, in terms of like the data-driven approach that I think all 3 of us sort of take to the markets, you're going to have a hard time believing that, that certain behaviors are playing out on like minute length timeframes or second length timeframes, and those same patterns are happening on monthly timeframes now. Now they may, and if there's data to suggest that they do, I think all 3 of us would be willing to sort of embrace it in that regard. But I just think there's a paucity of evidence at best to suggest that there's anything to it really. I'm speaking for them, and I don't mean to do that. So
it's also just really hard to test. Like, how would you actually
right.
optimize?
Yeah, and that's kind of what I meant. How your brain works. You need concrete ways of looking at things, and if you're just sort of I don't know about you guys, I don't take a very artistic approach to my analysis. I take a sort of a I guess there's an artistic sense to everything you do, but when I'm looking at the data, I'm not like sitting here thinking about how I can manipulate it to sort of fit what I want to happen. I want to know what's going to happen based on what I'm seeing, not what I hope happens. And here's how I'm going to contort it to fit my preconceived notions.
Yeah, I mean, my view is like the more I can take human involvement out of the picture, the better.
Right.
Like if I can take all of if I'm doing as little as possible to get the data, ideally nothing to get the data, that's what I want, because I don't want to be, because there's just human bias that's always going to creep in anytime you start having input on what the data is.
Right. All right. Last one. This is a good question though. How do you guys evaluate layer ones? Do you have a set process?
It's a good question. I've actually been thinking about this recently. I mean, so yeah, I guess for me, it's like I feel like 3 dimensions I think about in terms of kind of like the medium term potential movements of layer ones, I guess. Because like I feel like there's obviously the fundamental value, which comes down, oftentimes comes down to that trilemma kind of issue and the ability to scale transaction per seconds, all that kind of stuff. But actually, in some ways, feel like there are 2 other dimensions that are just as important that don't always get talked about as often with those, which is community network effects type of things, where oftentimes, like take ADA, for example, we were just talking about. I think by no small amount, ADA has been as successful as it's been because of the community size. It's massive. There's so many ADA investors. Now, XRP is not a layer 1, but I think it's a similar thing there. There's a huge community of XRP people, and they're loyal. They're there. They're not going anywhere. And so that gives staying power if you have that kind of community built up. Where then you see some other projects that just never really build that community, that have good technology, but they just don't really go anywhere because they don't have that kind of strong community underlying them, really holding them up. And then I think the other thing that also matters for layer 1s is narrative fit to some degree. So for example, with like interoperability, for example, like that's part of what I think with some of these layer 1s is like, are they fitting that narrative focus now? And I think the ones that do will do better. Or for example, when we're in the phase when Solana and like AVAX and Phantom were going nuts, a lot of the narrative around layer 1s at that time were ability to support ecosystems, specifically, NFT and DeFi ecosystems. And so even though there are other layer 1 blockchains out there that have really good tech, like say Algorand or here Hashgraph, or just to name a few that have good technology, they didn't really get quite as crazy pumps as some of those other ones because they weren't filling that narrative niche as well, or they weren't demonstrating that as much as some of the other ones. So that's just my kind of loose framework. But I do personally believe that those things matter. And sometimes they can even matter more than the fundamentals, potentially, or at least as it seems to be what happens in more shorter timeframes sometimes. I don't know if Joe, if you have other thoughts, or that's just some things I think about.
I'm going to take liberty with this question a little bit because I have kind of a pet theory about layer 1s, and this is my opportunity to tell you guys about it. All the non-Ethereum layer 1s that have been really successful so far are aesthetically pleasing. They all are kind of thematic and enjoyable to use. So like you got Phantom, which is all about ghosts. Avalanche is all about snow. Solana is all about sun. Atom is all about science. BNB is like, I don't know, like cartoons or something. They all have some kind of aesthetic and thematic appeal, which I think is partly explains which ones have been successful in this kind of early phase, this like first iteration of the L1 craze. What exactly that means going forward is arguable, but I tend to think that like that's not an especially sustainable or substantive route to the top. I think it's kind of a shortcut to the top. And I would guess that as the use cases get more embedded in industry and there's more and more on the line for these L1 chains, that's probably not what's going to drive success. So I'm guessing that some really bland corporate feeling, non-thematic, non-aesthetically pleasing, but super powerful, effective blockchains are going to burst onto the scene. But maybe they just haven't yet because they're just not that, they're just not that fun.
Yeah.
So fun, I think, has been a driver, and I really doubt that it's going to stay a major driver.
Yeah, I mean, there's been a lot of people that have argued that Near protocol hasn't done nearly as well as a lot of others because of the fact that their marketing sucks, in spite of the fact that their technology is really good. Others being the fact that they have a tough time getting listed on American exchanges. But I think that's a great point, that I think there's a disconnection between a lot of people's idea of what the value of an asset is also, because they think of the value as being when we have these retail phases of the market. That is the value. That's not the value of the asset. That is a You have millions of people that know nothing about crypto, that know nothing about the asset class, that don't care about the asset class. They don't use it. They don't use the networks. They, they're not even really investors in it. They just happen to be invested in AMC a month ago and made some money from it. And so they're coming over to crypto and just trying to make a buck. That is not your value of the asset. Your value of the asset are these more bland times in the market when you have actual people using the network, actual people investing, long-term investors in the network. It's not these parabolic blow up phases. These just happen to be perks of the investment. If you're an investor, if you're a long-term investor, you get to sell to those people who are naturally, some of them will stay on, and that's how we get higher prices over time. But during the course of a market cycle, they're going to come and go repeatedly. So I think sort of these, just overblown right now might be a good time to think about, like, this might be closer to the real value of the asset rather than, in May or April when Matic is going from whatever 95 cents up to $3 in the course of a few days. That's not the value of an asset. That's a bunch of people that, aren't here to stay. That's a bunch of transient people coming in, throwing their money at something, hoping to get rich quick. So I think that's an important distinction that a lot of people sort of pass up or don't think about often. So as far as though how I, that's an aside, but how I, look at layer ones, I just kind of go on fundamentals. And, I think exactly what Joe said is spot on. Marketing matters a lot. Marketing and who's behind the project. So I think that's it's probably a good place to stop. We covered a pretty, you now know everything you need to know about cryptocurrency. So good luck, everyone.
To the moon.
Yeah, to the moon.
Yeah.
Well, yeah, I think that'll be it for this one, guys. So thanks again to Mark and Joe. And by the way, guys, we are currently working on a website. And is your guys, the, what's that thing? The survey still available?
That's closed.
Okay.
Folks are now have access to Bitcoin and Ethereum APIs.
Okay,
if you
cool.
are not able to complete that survey to get access to it, you can reach out to us at upsidedowncryptodata@gmail. We can probably if certainly if we get a bunch of people who miss that boat and are interested, we can work something out.
Yes.
Although it probably wouldn't be for the same duration.
Yeah. So if you guys want to get access to their BTC and ETH, their model that they have, just message them there on Gmail. What is it again? The
Gmail is upside down crypto data, and you can also DM us on Twitter.
All right, cool. Yeah, and we're working on a website now. So if you guys have any suggestions for what you'd like to see on there, let us know, because that'll be coming probably I don't know, maybe a month or two. It's a slow process, but then kind of the way that we want to take to approaching the website, it's a little more technical, so it's going to take a little bit of time, but it'll be worth it when we're done. Yeah, we're like Ada. We have a rigorous academic approach we're taking. So all right, guys, that's going to be it for this one. Until next time.
Thanks very much.
Yeah,
Right.
see you.
Thanks for having us, Jake.
All right, see you guys.
Yep.
Wait, hold on. Now I always take 2 minutes to go off air also. I'm not good as, all right, later.